You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
What's happening, everybody? Happy Tuesday. Getting a nice little push on the SPX just right now. This is good. Hopefully we're coming back into some of this gap fill territory. I have a put spread combo that I'm liking. I'm going after a, kind of run up here towards like 59.80 to 6,000. So initially this morning, I had a sell side on the call and put spread that did pretty well. Grabbed some profit there in about 30 minutes. Right now, this is the direction that I want to see. Hopefully I can squeeze in about $100 here. It's trading for, I don't know if this is like off right now. Right now showing about $60 of profit. Let me see if I can get this thing. So I have $1.30 set. I'm going to try to set this for $1.60, which would give me $100 per contract. And let's see what we get. So I'm going to bump this chart alarm down. Let's go to like 55 here. So 59.55. See if we can make just a fresh intraday high off the open versus staying in this chop fest. So hopefully a run to like 59.55. I've got a nice level at 59.70. I'm looking to see if we can have a directional run today towards 6,000. I'm looking to see, I also don't have to set a take profit on this. I might just go after a slightly bigger winner. So let me set this one. Replace $1.30. I'll set that at $1.30 and just keep an eye on it for the morning. Chart alarm goes off. That's a good sign. I'll spot check it and then look to see if we just stay above my levels today. As long as price stays above here, then that is potentially worth $260 today. And we stay up there, that's good. So if we get a, move back into the gap fill, directional play into this, like I said, 6,000 handles, a big monthly level I've been watching this week. And we'll see if we can, kind of eke out some fresh highs. So let me see what this looks like. Keep an eye on this one. All right, let's go some top-down analysis. I think everyone may be wondering where the turning point is, if there is one. There's not a ton of resistance or support in this market. Do I swing trade options? Absolutely, always. I swing trade with a lot of ratio spreads. I swing trade with a lot of put spreads, debit spreads. I swing trade with diagonal spreads. So yeah, you give me an option strategy, I've probably traded it. Favorite asset class. All right. So what I was just saying is there is not a ton of resistance up here. There's also not a ton of support. I think that it's, we're clearly in a bit of a drift mode right now. Watching the markets do its thing. It's like you just kind of grind higher. Yesterday was really interesting. We had the Friday downgrade. The market opened up lower and just ripped immediately. And we did end up poking some fresh highs. So I'm curious if that was just a bit of a noisy intraday move that is still kind of topping out, or if there's still room to try to get up into this like 6,000 handle. Above 6,000, there's not really a ton of resistance. So it is quite possible that, if we get to 6,000, it might be a round number resistance area, but we also may just keep drifting. What's to stop 6,000 from becoming 61? I mean, right now it's like you look left, bulls are going to go, come gunning for that high. Then let's see if we get there, I guess. Okay. So just keeping an eye on things. I still personally would like to see a pullback. I think this market has been a bit ridiculous. Given the right side of the trend line, it's just, it's up nearly 500 points on the right-hand side of the trend line. But it just has been like, intraday and just massive gaps. So we'll see. But I'm going to keep an eye on this one for this morning and see if we get up into this gap area. Qs are very similar. So if you go, Nasdaq, there's a monster gap right here that I'd like to see filled. I just don't know what it's not just going to happen by itself. More than likely, there's going to have to be a why. Why is that happening? And look, it doesn't matter why. I think the reality is this should happen. This should fill. The question is, are we going to fill from a higher level, or give bulls a chance to actually participate in a little bit of a backfill and then a run back up. And what we never know is, like, what day, what's the catalyst, how long does it take? If this was just like a slow grind lower, well, it'd be way easier to be a buyer, because that would just be a matter of, okay, well, buy it. But if it is like some, monster red candle, okay, fine, but I still think that offers up a buying opportunity. It's just gonna scare investors a little bit more. You just don't want to see like a high volatility sell off. But that being said, the VIX has been much, much, much lower. One of the biggest vol crushes we've seen, I think, maybe one of the top, one or two or three in history, as far as how persistent this was at going down, especially since that pivot on the seventh was like the peak fear. And then we had the ninth, which was the largest single day crush in volatility ever, percentage wise. And here we are back into the teens. So, any type of elevated move in volatility, I suppose it makes some sense. We do see elevated volatility after we have this big crush. So we'll keep an eye on it, right? So there's, S&P and the Qs go to the Dow. Um, United Healthcare came back in a pretty decent way. Healthcare has responded pretty nicely. I'd still like to see some gap fills here. Dow actually looks pretty attractive to continue to grind higher. S&P is much closer to all-time highs. Qs are much closer to all-time highs. Dow has a little bit more gains. Russell Russell has a long ways to go. Okay. Um, Same thing here. It's like, do we have a gap fill? I mean, the Russell to me looks a lot better if we're above the 200 moving average, right? Like, I'm using the Russell to sell a bunch of premium because it's a cheaper ETF. There's a lot of potential catch up trade here. I think the issue that the Russell has is there are a lot of stocks in a 2,000 stock index, and a lot of them are not profitable. And until the Fed starts to cut rates, this may not benefit a lot of those companies. So, if we have a resistance level, I can see this thing pulling back and still technically stand on the left-hand side of this trend line, right? I'd feel a lot more confident about longer term gains on the Russell if we break this high, right? And then pull back and fill this gap on the right-hand side of the trend line. That to me is a much better position to start buying, and then looking to go longer term to the upside. But if I'm buying it here, it's like, well, this could just turn back down. That doesn't necessarily give me anything bullish. This might still be setting up for some type of reversal pattern, and we could pull back into this area and still be a bullish trade. But then the next leg would be we have to surge on the right hand side of the trend line and go up, right? Okay. So just keeping an eye on a couple things today. Good, good there. All right. So that's Russell. Go back to the chat. Oh, by the way, Chandler and James and team, I do have a hard stop at 11. Let me confirm that here. Um, okay, so I'm gonna go the power hour here. Let's get through as much as we can here in 30 minutes. All right, so Qs, Dow, Russell. Let's take a look at bond volatility's up a little bit. SVXY, I wouldn't mind getting, some type of elevated volatility to buy some more SVXY, but this is like, I only trade this when we have a vol event. That's it. Dixie, this is the DXY. So I'm not getting faked out into like selling the dollar. My exposure on this one, as we talked about now for about a week, is I'm long euro dollar. And so far that trade's looking pretty good. I'm up about 70 pips. And I want this level. So this is trade one, pending order trade two, pending order trade three. If this goes up to retest the highs at 1500 or 1550, I'm going to close this trade for a winner. I'm going to cancel this trade and cancel this trade. That is the setup, because all this is for me is a swing. We go from low to high. We pull back between the 30 and 38% retracement zones. Okay. Probability, in my opinion, if those are shallow pullbacks, is that we go back and retest the high. That's all I want. I'm not looking for some crazy run on the dollar. If we go back up and we range where this goes back up here, then back down here, back up here, fine. This is the trade that I'm after. Okay. So this might be the easiest trade. If we're long euro dollar, we get to the highs, I'm taking profit there, and I won't worry about those trades. I'll just cancel them. Okay. Thursday. Hang on a second. Sorry, I'm getting some schedule asks. Give me one moment here. 1 to 2:30. Okay. So that's euro dollar. That's dollar index. That's about the only way I see a clean trade on the dollar is if we retest the low. That's a good trade to me. I'm not taking the plunge and just trying to really dump the dollar. I think this, if anything, this works its way back down, tests the lows, maybe goes a little bit lower. Look for a bear trap scenario, maybe some divergence, and it pops back up here. Strong support that can still become resistance. Obviously, a big directional trade is oftentimes followed by non-direction, right? A decision move is followed by indecision. So I'm not getting crazy directional here outside of maybe a little bit of range bound trading. But if we're, selling high and taking it back down to retest lows, that'd be the same thing with that euro dollar, buying that 1150 area, trying to take it back up to 1550. Make sense? Okay. That's dollar. Let's go oil. You guessed it, still in a range. I don't have a trade on oil. I just think this is something to watch. Honestly, I say this a lot. Like I like the idea of just constantly selling premium on oil. I just don't like the backwards reward to risk. And I don't know if this is going to be. I mean, at some point this would probably be like a volatility play, but we're just so stuck between these range levels. I just think oil is if you got the guts to sell premium, take your strangles, your iron condors. That's a great trade in the futures market. I just don't know if we get a pop to the upside or downside. It obviously threatens those positions. So trade accordingly and make sure the risk isn't crazy high. But I mean, that to me is a high probability right now. Is we just stay range bound. Natural gas. I am actually I need to add another leg to my UNG position to lower my debit. I've got I just had this one expire on the $19 call side, so my debit's 1088 from a $5 long. I might just keep it at 19 or 18 to make a few bucks on this. I might roll it down. But I do think, I mean, I'm long out to 2027. I think natural gas will still be something that goes up. Gold, hey, gold's making a little run off that 50 period moving average. So I got to ask how many people are long gold. Maybe that's enough. Okay. Just saying, look, I'm still going to be very patient on gold. This, and this. 100, 144, 200 moving average. That's what I'm waiting for. To me, if we're in a bit of a correction in gold, it could play out this way, right? That'd be my correction. So high to low, lower high to lower low, lower high to lower low. This actually would be a pretty nice orderly retracement on gold. And I'd love to get a position where I can go, here's what I want to see. I talked about this yesterday. I'd love to see gold come down to this 144, 200 moving average, close below it, close above it, take a trade, position for gold futures, position for GLD, go back up to the highs. If we go higher, that's gravy. We get back to the highs here. That's my primary trade. Try to position for a, low risk, high reward, give myself, 2 to 1, 3 to 1 on a swing position. But also if I'm going to hang on to a core position for higher highs, yippee skippy, you know. But I'm not bearish. I mean, I'm just waiting to add more exposure to gold. This to me in the near term, I just think we have a little bit of a correction. So it's hard for me to justify buying unless I'm going to buy small and small and small, and that positions me for a bigger picture move. That's it. Like if I buy it here, I can't put a stop loss there. That's a terrible trade. So I buy it here small. I buy it here. I buy it here. I dollar cost average. That's my position. Okay, silver looking better. I still like silver a lot. I think this structure is pretty nice. If we can get a break to the upside and this runs, look, if we take out this high and this high, silver is open space above $35. I love silver if we get above $35. I'm prepared for silver to still maybe come back down into here, into 29. And if it does, I'll still look at positioning maybe some SI, some silver futures. But if we break above 35, if we get a play up into here and it breaks above 35, I'm holding this thing to 45 bucks to nearly 50 bucks. That's my big, like big directional play that I can still measure, that I can get back to these recent highs. 2011, 1980, those are highs around 50 bucks. I'd love to see silver get back there. We're celebrating gold at all-time highs. Why can't silver, revisit all-time highs? All right, Bitcoin. I put in some buy orders on IBIT yesterday. I put in a trade on IBIT. I'm looking to basically, fill in the pockets like we talked about the last couple weeks. I have a position to buy here, and a position to buy here, and a position to buy here. 1, 2, 3. Accumulation phase. We come back up to the highs again, and maybe dump some shares, maybe not. Maybe hold on for higher highs. Obviously, if we get to the highs, that's fine. I'm still holding a core position. If we break the highs, okay. There's, it always makes us feel like, should I just buy it now? Well, think of it this way. If we break the highs, we're likely still going to pull back to find the highs, right? So this becomes a potential bouncing point. You can still enter there if you are convinced of the breakout. I like the potential overbought conditions with divergence. I want to see a bit of a backfill here. So I'd like to see some efficiency. Now, we may not find position 3, but I think position 1 and or position 2 gets found. And that's what I'm watching for. So I'm leveling into IBIT right here. So leveling in around 50, like $54.50, leveling in around $50 and down near the lows around $44. Those are my positions. Okay, Ethereum. I mentioned this one. I personally, I traded Ethereum back here. I was long in Ethereum here, and I was long in Ethereum. Where was it? Over here. This was like a ratio spread that I did on an ETF that made me some money. I'm glad I got out of the trade because obviously it went against me afterwards. But now that we are on the right-hand side of the trend line, I'm sure there are some speculators that are talking about how the catch-up trade would be Ethereum outperforms Bitcoin. Maybe it does, but I still like Bitcoin better. Okay, Mason, I literally just talked about silver. If we break 35, I'm going to 45 and 50 bucks. Still good support at 29, still good support at 26. But hopefully this is just a little bit of a pause. I'd love to see silver get a run here, break the high, get some open space, and off we go. I mean, it's not going to rip. Like silver is usually pretty efficient. It doesn't go up without having pullbacks, but there could be some really good buying opportunities to buy higher lows. Okay, copper. I'd love to see this trade work. That little like 40 to 45 day butterfly spread that I did, I'd love to see this trade work. I paid $90 for something that could hopefully offer up like $1,400 in profit. Let me take a look at my SPX trade this morning. We're getting a move to the upside, which is going into that opening bell range. Let me check my position. Now my dollar, all right, I'm up 90 bucks, actually 110 bucks right now. Let me see if I can close this thing up. $1.55. Let's go, man. All right, I'm going to take some money out of this put spread this morning. Take a look at a couple of my levels. There we go. So this is SPX getting just above that opening bell range. Let's close that gap, baby. Hopefully we're making a run towards, this is starting to climb a little bit more towards the 6,000 handle. I've got 2 trades running right now. One is a put spread that's looking better. I might just protect that profit right now. And then I've got a butterfly spread that is right up here that I'd like to see if we can make a run directionally for the day. That butterfly spread for 40 cents can hopefully double. So right now, put spread is getting close. I'm going to update this one. So buck, let's go buck 40. See if I can close this thing down. Bah, so that's $1.20 on that one. I'm closing that thing down. Okay. Update. 250 credit. close $2 debit in session. The put spread combo entry for 260 credit, close for $1.40 debit just now. Okay, so now we'll see where this day wants to unfold. If we see more directional pushes to this high, that's good. I want to see if I can get my butterfly spread to start showing some promise. I've got a 59.85, 59.85, 59.95, and 6005. If we're making a run towards this larger gamma level at 6,000, I'd love to see it. So I'll keep an eye on that for the morning. Let's go. All right, taking zip profit. So net on the day, I'll figure out where those closes are, but that is 120. Okay, off we go. Next, copper, lottery trade, Japanese yen, Nikkei. Let's check currency strength for the morning. Interesting mix on the day. Swiss is on top. Holy, weak Aussie and New Zealand. That's really weak on the Aussie. So what the hell? Did they just cut rates? Is that what happened last night? So this week, they did cut rates by 25 basis points. CAD inflation slightly higher. UK inflation is tomorrow. PMI numbers on Thursday. So that's it. Let's go medium and low impact as well. What else is happening today? So they cut CAD CPI. President Trump at 3 p.m. Only president on the economic calendar. Probably some big, bad, beautiful announcement at 3 p.m. I'm curious how the final hour looks today. So, let's an interesting segment yesterday. It was Tasty Live was Tom Sosnoff, Dylan Radigan. Just a lot of stuff going on that basically it's like, well, Trump realizes that if you cause a trade war and put increased prices on everything, people don't like it. So the pivot is, let's not do that. Now we're looking to add to the deficit, add fiscal spending, probably have more fiscal spending than Biden, but you'll never know it because he'll never tell you that. He'll tell you that Biden was the worst president ever and the worst administration, and we're probably going to do the same thing in the same cycle, which is government's going to spend. You can't cut it. Doge is worthless. It was a pointless effort. Elon Musk, lost hundreds of billions of dollars of wealth overnight, and we just have a president that wants to be front and center and front page news every single day. So that's Trump 2.0. It's just going to make for a wild and crazy market, and I think that at the end of the day, the U.S. it's fine. I think there is a global bubble that could be a bubbling and brewing, but these highs could be dramatically higher, like dramatically higher. So I think, if you can't beat them, join them. And it's fun to participate when you've got money to the upside. Okay. All right. Copper. Let's go with Germany. Germany's up to some fresh highs again. FTSE, I mean, UK has been looking pretty good on this comeback as well. Argentina, wow, this thing really screamed up there towards the upside. China's having a good couple of days. Brazil, better above the 200. ILF is Latin America. Nice little push above this 200 moving average. I'm in both of these long. Bought in near the lows around 22 bucks on ILF and bought in around 24 on EWZ for Brazil. So a little bit of the non-US exposure. SCHY is my Eurozone and China exposure, as well as some Chinese stocks. MAGS is still sideways. Another one that kind of looks like, are we gonna hang here? Oops, let me change the color. Are we gonna hang here on MAGS and then go higher? This might be driven by NVIDIA earnings, which are coming up at the end of the month. So that's something to watch for. We also still have this notable gap. So if NVIDIA doesn't just blow out earnings, we might see a bit of a pullback. But if we get into open space and this is heading higher, guess what drags the markets to all-time highs? Probably the MAG7. The nice thing is we have market breadth that's responding. We've got a lot of stocks above the 50-day moving averages on the S&P and the Nasdaq. But Mags, what was once so hated out of the rotation in 2025, has come back in a nice way. If you like those stocks, which I do, I still like positioning, and I took a lot of positions on all of them this year, mostly just through options and income trades. But I'm still selling calls on the shares that I have of Apple. I did uh, roll my calls down a little bit on Amazon. I'm okay letting some shares go near the highs, and then I'm just adding more ratio spreads on Amazon. Broadcom, this one I missed. I had a ratio spread when we hit the 200. That worked out well, but I didn't get really any of the upside gain there, which is okay. But Google, nice hold around that 150 handle. I think that's strong support. These are my dollar cost average levels. I'd love to see Google get back to the highs. I did dollar cost average into Google. So my break even is somewhere in here. Okay. If we get greater than 191 and we start filling this gap up here, I'm okay taking profit on my allocation and just go back to trading options on it. Meta, I'd like to see some pullbacks here. Meta, and what? Somebody give me an example of Meta. Like, what the hell happened to their chart? Am I missing something here? Is this a there we go. That was weird. The daily chart on TradingView is a little glitchy. There's the weekly. All right. We'll see. Maybe a range trade. Maybe, I mean, this would be great. We had this huge run to the upside. I'd love to see a high, low, lower, high, lower, low. In this current environment, though, I don't know if we're going to get it. This might be just the one pullback that just sends this thing higher. So wishful thinking. If we have a bit of a dip, I might look at some option trades. I like to do some 1-1-1s and like put condor trades. But yeah, I want to pull back. I was hoping we come back into this 450 to 400 zone. We never got there. Microsoft. Own some shares. It's been working out pretty nicely. I'm looking to take some profit at the all-time highs. Netflix, trying to grind out some highs. NVIDIA, working its way back. My 130 level, I'll keep adding covered calls. Tesla, stuck for right now, but I'm just still selling calls. Berkshire Hathaway. Bond market, I'm sure there's some squeeze pressure here in the bond market. I am actively trying to get rid of my TLT positions. Actively. Not for losses. Like I'm gonna use options, lower my cost basis, try to get rid of them. But yeah, I'm not looking for anything wild and crazy here. But I think a little squeeze would go a long ways. And I think that the U.S. bond market is potentially the most troubling thing that's happening right now. We basically broke the bond market, or at least made it flinch, and that set everything off. It's like now I think yields are not coming back down. I don't know if that's really going to hurt equities or it's just going to be the same old, which is, well, everything's higher. Yields go higher. It's harder to borrow, but it's still going to balloon asset prices. And it's going to attract more. I mean, it's ideally, if you have higher yields, it's like, is it going to attract foreign investors? Is it going to attract people to buy U.S. debt? The one thing we're wondering is like, will the U.S. debt auction, will we ever have one that's like abysmal? Will we fail a debt auction, right? And what does that look like for the overall U.S. status? We'll find out. But anyway, I think a squeeze on bonds would be helpful, but just don't hold your breath. We have been in a multi-year drawdown and a multi-year bear market in bonds, and I don't see this getting good anytime soon, especially if we're going to see a safe haven trade on bonds. That means you're going to sacrifice a lot of equities. So I think with equities running hot and probably looking to hit all-time highs, I don't see the bond market doing anything outside of maybe a bit of a squeeze in the short term. Expect to see mortgage rates probably creeping back up towards 7% in the coming months. Currencies, I got about 10 minutes left before I have to go. We've talked about this. This is important. Okay. Everyone's worried about a recession. No longer. Okay. Look, a recession is not going to happen until something shows high levels of inflation trend or high level of unemployment trends. If we have initial jobless claims spiking higher or continued jobless claims spiking higher, which you can see right here in these charts, this prints every single week. Okay. If these are not trending higher, there is no real risk of a US recession. You can throw in all the analogs, you can look at all the historical alignments, it doesn't matter. Okay? I think this market right now could pull back 10% and it's still a bull market to me, right? I did a video on that. I posted that in the Pulver Alert section for my trading journal. We can still have pullbacks, but if we're not really taking out April lows, this bull market is still in check and it's just going to offer up a chance to buy. So I hope we get a pullback. It's that simple. Okay. All right. Some China exposure here. Watching Alibaba have some shares. Baidu. Baidu has earnings this week. I'm gonna look to price in a play on earnings. We'll see what the calculations look like. I don't have any covered calls. If we actually get a surge to the upside, that would be good. I hope that we do. Maybe I sell some calls after earnings if it's positive. I do have some puts. I'll still kind of monitor my protection levels. FXI still having some shares looking to get back to highs. JD is at 34. I'm going to sell some calls on this one. Schwab dividend, Schwab growth, those are fine. This one trades a lot like the Qs, is just way cheaper. Less on options, but just as far as buying and holding, it represents the same thing. It's just, if you want to buy something that has 200 tech companies versus the Nasdaq 100, this is a pretty good basket. So that's SCHG, and I bought this thing around 25 bucks. Here's the advanced decline line. 50-day moving average. We're now 78% of stocks are above the 50-day moving average. That's a pretty good sign of market breadth. We are now almost 55% of stocks are back above the 200-day moving average. Again, showing that there's room to run. Now, as far as a short-term correction, maybe this melt up happens. Okay. Big Les, I think you can tone it down a second. I don't think you really know me to say something like that. I'm certainly more of a trader centrist. I could give two shits about politics, but I can openly say what I want because this is crazy, man. Like politics have never blended into the markets like it is here. We've never had a president on the economic calendar every single week. We've never had a president that feeds off of being front center news every single day. Biden was a dementia puppet, I think our two-party system is the worst. I think government is awful. I think we're running towards a huge fiscal problem, and I'm just trying to trade it. So I think you can tone it down. DXY weakness. Yeah, I'm trading euro dollar long there, soccer boy. Market breadth to the upside. This would be a short-term topping pattern to me. If we start to see that most of the stocks, above the 50-day are reaching like 90+%, at least in the interim, that's probably going to be ventilated a little bit. So, again, I don't like to call tops necessarily, but you can kind of get a sense when like things get a little toppy. Okay. And again, just to point on Big Les, really funny. It's like, how emotional have people been for the last decade in politics? More than ever before, right? Like, look, I say one thing that as a centrist, I can say whatever I want. I could care less about Republicans or Democrats. I think they both suck. They both suck. I hate politics. And I say one thing, it's like, boom, emotion, insults, troll. It's like, why can't we just have a conversation? Can I have an opinion? Can we talk about it rationally? It's funny, man. Like it's so one-sided. You're either all in or you're all out, and there's no in between. But it's funny. Can't we all get along? Yeah, I get it. And you're blaming one party for that? I mean, if you do the research, you'll see that Republicans are just as bad, if not worse. Republicans over a century have added more to the deficit than Democrats. No joke. So they're both as bad. Like we don't have a conservative party anymore. Doge had an idea of cutting $1 to $2 trillion. We cut what, 150 billion? That's just how bloated government is. We're running at 108% debt to GDP anyway. We're running a deficit of 6 to 8% already. And it's just, I think Trump realized like you can't stop that machine without breaking something. And we had a flinch. And that's what April 7th was. Yep. So anyway, enough about that. Let's get some currencies. I got about 5 minutes before I have to go. MDU. What is MDU? Gas distributors. Okay. So is this in utility space? I'll look them up fundamentally. I'll talk about that later today, Daniel. Maybe my 3 p.m. session, we'll take a look at that one. Let me get some currencies. So Aussie CAD, rate cut by the Aussie. So if they get a pullback, I'm still liking this trade in here. If we get a pullback, a swing on the Aussie CAD, Aussie Swiss, pullback. Like I said, this is why I'm patient and I'm not just stacking up a bunch of orders. I still like this trade, coming back in this pocket. I'm still looking to see if we get back to the 200 moving average, but this also may be pulling back for a higher low and then a swing higher. This also might pull back to revisit lows. It's going to be a combination of how much weaker the Aussie gets right now with that rate cut and also how gold plays out. Gold gets weaker, then yeah, I think Aussie Swiss continues to go higher. Yen pairs, I just be careful on the yen as always. Aussie New Zealand also pulling back. I might get the pullback that I want in Aussie New Zealand. I might get my 106, my 103, my 101. This actually would be I'd be pretty happy if I get an entry here, entry here, entry here, and some inefficiencies along the way. I will load up some Aussie New Zealand longs in a big range trade, but not yet. Aussie dollar. This is why I said wait for a pullback. If you get a pullback into these areas, I think that looks pretty good. Let's see here, CAD, Swiss Aussie or Swiss yen, no, Euro Aussie. This is finally starting to pull back. I'm not sure if anybody is, I wanted to get a pullback into here to sell the Euro Aussie. It just kept sliding lower. Looks like we kind of caught a bid off this past, resistance and support zone. So if we got some scalpers, maybe a little pullback on Euro Aussie, but I wouldn't chase it. Euro CAD. Still like stubborn, but I think this is still setting up for a bit of a topping pattern. This could be head and shoulders here. So if we don't break the highs, I think this sets up for a nice reversal pattern. Oil is just so choppy right now. Euro Swiss, still waiting to see how this thing bottoms out. Euro pound robot trading. Euro yen no trade. Euro New Zealand. I mean, if you're brave, maybe looking for a long position here for a short-term trade, I think that'd be more of a risk-off trade if you're long Euro New Zealand or Euro Aussie. Euro dollar, I do like that one right now. I'm up about 80 pips. See if we can get back to the highs at 1500. Pound, same thing here. Get a bit of a squeeze. We'll see. I mean, if you're long like this candle and it holds, there's certainly room to pull back into this swing. So we find this high, maybe pull back a little bit deeper. That would be a scalping opportunity on pound Aussie. Pound CAD, I'd say no trade. Pound Swiss, I'm looking to see if this gets back into 1350. Pound yen, pound New Zealand's, pound dollar, don't love. I'm looking for, I like Euro dollar better as far as playing the dollar. New Zealand CAD, I love this trade on New Zealand CAD if we get a pullback towards left structure, somewhere in here for a swing trade. New Zealand Swiss, still waiting to see how this bottom plays out. New Zealand dollar, I'll pull back into this area, be probably 58 to 57. Dollar CAD, garbage. Dollar Swiss, I need to wait for a trend line break or see this thing bottom with some divergence. So if we come back down to some lows, does it hold the lows? Does it go slightly lower with divergence? Do we put a bottoming pattern in? Right side of the trend line to me is the much better trade. So waiting to see how that plays out. Okay. All right. And then lastly, dollar yen. You had a chance to buy this thing low and take it up for 800 pips. Now I'm out of the dollar yen. Like, what do you do here? Nothing. Maybe a hold at these lows, but right in the middle. So, if you're watching closely, maybe a trend line break here, maybe a pop back up, but you got to get some confirmation before you take that trade. All right, that's it. I got a hard stop at 11. I do have to go. I'll be on a little bit longer tomorrow, but a little bit of top-down stuff. Markets have turned red on the morning, so we are down about 0.4% in the SPX. We're actually dropping pretty aggressively here these last couple of minutes. So nice thing is this morning took a winner out of some chop and took a winner out of some direction. And now the market can do whatever it wants. My day is kind of concluded. I'm just kind of monitoring and see what happens. This might still be a chop fest this morning. I don't really see any levels growing to the downside. So I'm not looking at like levels to the downside. Let me see if anything's growing. I do see that 5930 SPX swelling a little bit. So anyway, we'll see if it's just a chop fest today. It might be. Might kind of hang out for the day. So, all right, I'll let you go. Thanks for being with us today. And sorry for the early departure, but I'll be back tomorrow. All right, thanks. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.